As the June market flatlines, is summer pointing to a downward trend? Hello, everyone, and welcome to this week's edition of the Vancouver Life Real Estate Podcast and YouTube channel. Today, the stats are out for June, and somewhat predictable, but at the end of the day, the numbers are still sustainable, quite strong. But generally speaking, the indicators are continuing their downward trend, just at a little slower pace. Metro Vancouver is easing, from the crazy months that we've had. So it's nice to see a little bit of that pullback, maybe a little breath for some buyers here. And excited to get into the numbers. So Dan, why don't you take us off with home sales and we'll go from there.
Okay, much appreciated. Okay, home sales, our first indicator. Looking at June, we saw 3,762 homes sold last month. Coming off of a low baseline, last June was still quite pandemic induced with a pullback. So, there was 54% more homes sold than last June. But again, what's really important here and what we want you to pay more attention to is that we were 12% down from last month. So a pretty big decrease since just last month, but also with March being the peak, we're down 34% in sales since then. So natural pullback here. March was, of course, and probably will be the all-time high for many, many months and possibly years to come, but we were down 34% from there. Still, with these declines, let's look at the macro picture. The 10-year June sales average, we're still 18% above that. Wow. So we're coming off of extreme highs. We're still elevated, but again, the trend is downward.
Yeah, I don't know if that's a bad thing. I think it needs to be a little bit more sustainable, generally speaking. The pace of home sales over the last few months was just bananas. So to see it kind of taper off a little bit here, I think will be a welcome reprieve for a lot of buyers. But again, if you're selling, you've got to take this into consideration, right? Because everything you've been reading up until this day is, it's not maybe the story going forward, right? So especially let's take a look at new listings, because new listings was an interesting story this month around. 5,849 new listings hit the market in June. This, however, is only a 1.1% increase compared to the 5,787 homes listed in June of 2020. So pretty flat number, considering the pandemic and everything else we've been through. More interesting, 17.9% decrease compared to May, when 7,100 homes were listed. I think what this shows me is a couple of things. I think people were trying to catch on to the last of the tailwinds of that crazy market in May, throwing their properties on the market. When we look at the fact that, roughly similar numbers were hit this time last year, I'm seeing consistent consumption, right? And then now we're also looking at a lot of sellers that are probably going away. Taking vacation, taking time off. The priority of selling their home may have subsided a little bit here, especially with hot weather. I just think, and especially with kids being out of school too, I would expect sellers to largely hold off until September, unless they absolutely have to sell. I know that trying to sell a house with children in the house is absolutely bananas too. So, I think this is cyclical in many ways. But the story here is that really the numbers are flat, and in many ways they're decreasing. Let's jump over to active listings.
That's right. So after we take our home sales and our listings, it's going to leave us with how many homes are actively still remaining on the marketplace. So we're looking at about 10,800 homes right now are publicly available for sale. This is down about 5% from a year ago, but it's also down 1.2% from just last month. So we were tight last month, and surprisingly, we're even tighter here coming into July. Because I mean, you look at the numbers, right? Sure, we saw home sales down 12% last month, but we saw new listings down almost 18%. So things are really kind of slowing down on both sides, but remaining very tight. And of course, if the sales are outpacing the listings, we're going to remain in a fairly active seller's market for some time. Not as extreme as it was, but and loosening a bit, but still, very tight compared to our 10-year averages.
Yeah, the velocity of sales is gonna drop, but not necessarily the sales ratios, right? And I think that continues whether or not we're in a seller's market balanced or in a buyer's market. So sales ratio is what we're going to look at next. That's my favorite thing to look at because it is the best indicator in terms of behavior, what's going on in the marketplace. So generally speaking, across all asset types, we're at 34.7%, call it 35%, which puts us still in a strong seller's market, right? Anything above 20%. We were at 37% in May, so a bit of a moot change there, not too much happening. It's just a small, steady drop from the month before. However, when you look at March, we were at 58%, right? So we're down nearly 20% from that high in March, right? Now, if we actually break that down into asset classes, we actually hit 27.5% for detached homes, which is kind of a breath of fresh air if you're thinking of trying to buy one. Because back in March, that number was at 48%, right? So I think this is a bit of a result of prices that have climbed to such or escalated to such high numbers, right? So the buyer pool is continuing to shrink. And, generally speaking, activity levels are falling off in that asset class, right? So begs the question, is a lot of that property just simply out of reach now for the general buying public? Yeah, I think there's pockets anyways that are. With that being said, we'll touch on it later, though. Some of them, I think the highest volume of expensive homes was this month. Anyhow, looking at townhomes, townhomes are still in a very strong seller's market, 49.2% for townhomes. That's down, though, from nearly 80% in March. So, an even bigger drop off, if you will. But I do think that number in March was extremely high. And I think that actually where we're sitting now for townhomes based on price point, availability, stock, I don't know if we'll see, it'll decline a little bit now just going through the summer, but I really don't think that you're going to see much of a balanced market or a buyer's market in that territory. Townhomes are just so desirable, and, the detached cost is just so high that I think that townhomes will remain, duplexes will remain sort of the property that the vast majority of buyers are going to chase. Let's just talk about apartments too. Apartments at 37.1%. So still a strong seller's market for apartments. However, down from 61% in March, right? So continuing that downward trend. I do think the low end of the market, so the 350 at a kind of 500, 600K, is still very persistent. There's still a lot of action. We actually had a client this morning, wrote an offer last night on a property, and this morning was in multiples on it. So, it depends on what you're trying to buy, exactly where you're trying to buy. But, I think because of the lower cost of entry, we're still going to see some persistent buying and selling taking place in apartments.
Let's talk price. Everybody wants to know about price. And as of today, the average home in Vancouver, $1,175,000. So when you look back a full year into June 2020, we're up 14.5% in the average price. Wow. Obviously a massive number. And we've been hearing about these double-digit gains for months now. They are sustaining. But the big difference, and what we really want to point out here, is it's only a 0.2% increase from last month, essentially flat. The biggest takeaway that we want you to grab from that is that's the first sort of flat indicator of HPI price that we've seen dating back to November of 2020. So we've had quite a run that was, gosh, you look at the chart, it's almost vertical. So to see it go flat, it's a real indicator of where things are likely about to head next.
Yeah, it's kind of like bouncing off the top, right? Or at least cresting in some way, shape, or form. Whether it maintains, we'll see. But you know, the average increase, sorry, um, the median only dropped $750 though. So again, like you said, almost a moot point here in terms of price
Yeah.
growth.
Yeah, we really like to share at least 3 price indicators because the more data, the more accurate and the more educated everybody is as to what's truly happening in the market. So you've got HPI that was basically flat 0.2%. You've got median that dropped, but like $750.
Yeah.
But then average, average is an interesting one because the average home price last month increased up to $1.196 million, which is up about 15,000 from the month before. But we are under the April peak of 1,212,500. And I think what largely pushed up the average home price was that last month in June, there were 43 homes in GVRD that sold over the $5 million price point.
Whoa.
9 of those were over 10 million.
Holy.
And 2 were over $18 million.
Wow. That's a lot of expensive homes.
Yeah. Those top 9 homes alone were worth $120 million combined. So when you compare that 43 homes over 5 million, looking back just 1 month previous into May, for example, there were only 36 homes over 5 million and 3 over 10 as opposed to 9 last month.
So the average price increase up 15K is kind of skewed by the top end of the market here.
It'll get pulled up naturally when you're seeing that level of high priced homes selling in a singular month.
So the big money came out in June.
Big money came out. Yeah, I think, again, the big money is feeling confident in the marketplace. A lot of these homes have pools. And guess what's coming around the corner here? I guess we're in it now is summer. Maybe that was a bit of an indicator. But strong numbers at the high end that we're seeing in the luxury market back in Vancouver here. But let's bring it back down to home to the rest of us who can't afford $10, $18 million homes. Average detached home. We saw 1,262 detached homes sell last month, which again, we've got these low baselines, right? So it was up like 46% over June. So, kind of ignored that, but benchmark price wise, just cracked $1.8 million.
That's a staggering number. That's the benchmark price for a detached home in Vancouver. I mean, a year ago, we were like 155.
Jeez. Yeah.
So it's like if you were trying to buy a home and you missed the boat or you decided to wait, or maybe you took CMHC's advice and thought that the market was going to tank. I mean, this is a gut-wrenching boat to have missed. I mean, we're talking about 22% increase in price. It's hundreds of thousands of dollars in equity made in 1 year, right? It's that being said, though, is it starting to flatline for the summer? We'll see. I think so, but I do think that come September and the second half of the year, I don't think it's done. But
yeah, prices were flat this month, and I think with that declining sales to active listings ratio, Ryan, that we're going to see a softening in summer. But I also think we may see another sort of reigniting of interest come in the fall, right? September, October, when people are sort of back in real estate mode and after having spent a lot of money over summer and enjoyed themselves.
Well, and I think as the economy also opens up and as travel between the two countries continues to increase, you're going to see a whole lot more in terms of international students that are going to come in. Population's going to grow. You're going to have a whole lot more jobs in terms of especially tech in this city. A lot of those people are going to be coming after the summertime, right? So I suspect there's going to be quite a push in September, October, and for parts of November. But anyways, that remains to be seen.
So let's look at condos now. Last month, we saw about 1,775 condos sell, 60% higher than last June, but we know why. But pricing, $737,600 is your average condo right now, up about 9% from a year ago. But again, flat month, only a 0.1% price increase since May.
You want to know, this is a little bit of a sidebar, but it just came into my head. You know, the benchmark price for an apartment in Vancouver, $737,000. The benchmark price for buying a home, a single family home in the United States, is $380,000.
Mm-hmm.
Just to put something in perspective. Anyways, on to townhomes.
Yeah, we won't. Yeah,
don't need to dwell on that. But your townhomes, anyways. We saw again a 53.8% increase compared to the 472 sales last June. The benchmark price continues to climb here, $946,900. That represents a 17.4% increase from June 2020, and a slowing 1.1% increase compared to last month, right, in May. So I say a slowing, that would still put us on average for about 13% on the year if we just continued at 1.1% a month. So, it's still a big number.
Yeah, I think it's also interesting to look at like that HPI going up as little as it did, because it kind of puts us back on target for a quote unquote bit of a normal next 12 months if it were to sustain. Mm-hmm. Right? We don't know. Things are starting to feel like they're normal again. Maybe the real estate market will as well. But of course, normal for Vancouver is what, an average of 9% for the last 10 years. So
staggering number.
Yeah, cool. So that's basically what happened last month. Those are our June numbers. We like to kind of give a bit of our thoughts into what's going to happen next. And part of how we do that, of course, is by pulling in data from all sorts of sources. And of course, we can always look south, right? What's happening in the States, because the markets here often emulate the States quite closely. And the States technically opened up, most of the states did anyway, a month or 2 or 3 prior to British Columbia. And of course, what we're seeing there is home sales in the States, they dropped for like the 4th straight month now. So we're in the 2nd or 3rd month of home sales dropping. States is continuing to drop. So I predict that'll happen throughout summer there as well. And I think the best way of noting that is because mortgage applications are falling. And of course, when people apply for mortgages, it's pretty evident what's going to happen next. They're going to buy a home. So the fact that mortgage applications in the States are the lowest levels since January 2020, so pre-pandemic. And they had a fairly normal market leading up into the pandemic. So I think that's a really strong indicator that the US market is going to kind of dip as far as sales for at least the next 2-3 months here.
Yeah, and I think something that maybe speaks to that is that a record-breaking 2.2 million people flew south for the 4th of July weekend, right? So, I mean, we talked about it about 10 minutes ago, how we felt that, the vast majority of people now are shifting their focus away from buying a home and into doing something for the summer, and rightfully so. And I think that, people are thinking about mortgages probably a little bit later in the year now, right? It's just people want out. They want to do something. They want to celebrate. They want to hang out. They want to have, drinks together. They want to be social, right? So, speaking to that, and I'm sure you've heard it in your own reports, but the surge of travel was so intense that both in the roads and on the skies that it led to skyrocketing fuel prices, rental car shortages, widespread flight disruptions, and airlines actually paying their staff double time just to simply do their jobs to meet the demand that's currently coming through. So it's no surprise. It's not a hunch that we have. It's legitimately taking place, right? Actually, one more stat here. The U.S. weekly hotel occupancy is now at its highest levels since October 2019. So,
people are excited to go on vacation again.
And of course, money.
It's going to happen locally. I mean, have you tried booking a hotel in Kelowna lately for wine country?
I have actually.
Oh, there you go. What was that experience like?
Terrible. Well, I mean, terrible in the sense that last year I paid for a week in it was in West Kelowna, hotel in West Kelowna. I think it was about $800 we paid for the week or something like that. They want $1,000 a night right now.
Jeez.
So,
yeah. And they're going to get it.
Yeah. Yeah. It's very difficult to even find spots. And that's why it's at 1,000, right? I'm not even going to bother trying to rent a boat though.
Or buy one for that matter.
Yeah, exactly.
Lovely. So do you want to touch on immigration here to kind of wrap things up? Because it's obviously a great indicator of what's going to happen in our country looking forward.
Yeah, this is interesting. I looked at a couple articles that came out here on the CIC website, which tracks a lot of Canada's immigration. And I think we all know that, the immigration policy was to put 401,000 new immigrants in place, permanent residences in place, to continue the growth of Canada's population. Some of the stats that we're looking at now, the first quarter has come in 82,000 new permanent residences that were brought into the country. A lot of those were already here, and some of them were actually temp workers that really helped with getting the pandemic sorted out and the economy back running. So there's been some new avenues to gain permanent residency status here. However, it's still below the 100,000 mark that they need in order to hit 2.1% growth. Right now, when you look at the last year, Canada's population has only grown by 0.4%, which is not anywhere near the numbers they need in order to make up the shortfall from the pandemic. So we're way behind, is really the story. Another thing that's kind of worrying to me is that Canada's growth rate is actually, if we don't hit that 2.1%, there's roughly 9 million baby boomers that are set to reach retirement age by this decade. Our labor force will be decimated if we don't continue to bring in new immigration. If you think it's hard to find a painter or, a carpenter or something like that to do an improvement in your home, it's only going to get harder if these immigration numbers don't get hit. In fact, this is a very interesting stat. In 1971, there were 6.6 people of working age for every senior in Canada. Today, there are 3. So that number has more than halved. And then by 2035, not far from now, we're looking at only 2. So the newcomers and the future generations will end up having to pay far more in terms of taxes to sustain the public services that we currently rely on. So we need immigration. We need it bad, and I'm not quite sure that we're getting it. So interesting stats, because this plays into, fueling prices and who's buying our homes. And it's an important metric to pay attention to, in my opinion.
And of course, where the jobs are going to be demanded as well. Mm-hmm. I think we're going to be very light in proper senior care over the next 2 decades here. And so I think, if that's one place that people considering a new job could be looking at, because I think those are going to be very high paying, very long-term jobs coming up very quickly.
Yeah. And in terms of real estate investment too, I mean, senior care homes, that kind of thing, if you're looking for bigger multifamily investment type deals, I mean, you won't be the first to the punch. They've been, people have been buying those now for the last couple of years because they're seeing the same thing, right? So it's a very interesting dichotomy of our rising prices and aging demographic, and whether or not we can maintain the immigration needed.
Right? I know what my grandmother pays for her monthly stay at a care home, and it's pretty staggering. So I could understand why it's a desirable asset class. Mm-hmm. Lovely. Well, I think that wraps it up for us today. Obviously, the market is changing. So how does this affect you? Well, if you have been thinking about buying or selling and been waiting for a bit of a shift in the market, please reach out to us. We'd love to explore your specific scenario and if and how we can offer our services to help you.
And if you haven't already, please reach down, click that subscribe button, and hit that bell so you don't miss your next update.
Thanks so much. We'll see you next week.